So what makes price action? It is patterns. Patterns is what makes price action, because the movement of the price, is in manner of patterns. Ne? It's in manner of patterns. The reason we have something like technical analysis or price action, it is because people observed that the way the price behave or the way the price move, it moves in patterns. Ne? It moves in patterns. It doesn't move in a way that you cannot relate to, but the way that the market moves, it moves in a way that you can relate. That's why our lives as human beings, they are made of habits. Ne? They are made of habits. It is very likely that what you did yesterday is the exact same thing that you did today. If yesterday you wake up into your phone and you opened Instagram or WhatsApp, that's the same thing that you did even today. That's the same thing that you did even today. If you are used to maybe watching some lessons and taking notes, then that's something that you're going to be doing frequently. Our lives are made of habits. So even when it comes to trading, traders or human behavior, it is something that you can trace, something that you can record, something that you can plot data. And that's when price action was formulated, in the realization of the fact that traders or humans which are investing in the market, they usually invest using same methods, which causes the market to move in some kind of patterns or in some repetitive manner. I hope that one is making sense. So that's why price action works, or that's why trading is not that much complicated. Because the only thing that makes trading uncomfortable or that makes trading tormenting, it is the fact that it is a game which requires mindset a lot. It's a game which requires mindset a lot, because the pillars of trading, it is discipline and psychology. It is psychology and discipline. So both these things, they evolve from the mind. I know a lot of people think that for trading to be simple, we need to understand the technical part, which is the price action. Yes, that's a requirement. We really do need to understand that technical part. But then after understanding that technical part, we find that trading doesn't work. Again, it still doesn't work. Yet we have all the knowledge that we have when it comes to price action. Then it means that the missing point, it is the mindset, which is made of discipline and psychology. So that's why trading is a bit complicated. Not that people cannot predict the market. No, not that you do not know price action. You know price action. You know what the market is likely to do. You can see in this market movement that, okay, the market is moving down and it is likely to continue to move down. You have a lot of things that you can analyze and say, now it's on the high, now it's on the low. I'm just trying to open a good market, maybe to use it as an example. Admit. So here we've this market here, with this chart of gold here, with this chart of gold here. For an example, let's say after this low was formed, or after this low came in, I was already watching to see what the market is going to do, because I know that when the market gives something like a low which is not lower than the previous one, I'm likely to see the opposing side coming in, or I'm likely to see the buyers kicking in. So then I drew this zone here waiting for a breakout, and now it broke out. That's when I took the buy. But I don't say you guys should buy. It's dangerous, but for me, I took it for some reasons and I know why. So it's not a signal. I'm just making an example. So I'm just trying to show you that we really have some kind of rules that we follow, or some kind of patterns. Because if you can see these are the double bottom, or a lot of you guys, you call it a W pattern. Ne? It's a double bottom pattern, which simply have a meaning, because that's where patterns comes in handy. You need to be using a pattern that you know the meaning of it. That's why I first explained the meaning of this pattern, that it's a low which is not lower than the previous one, which gives us some kind of a clue that, okay, the sellers, they are weaker, or they are no longer able to beat their previous record, which was that low there. They were not able to beat their previous record. And the most important part about the double bottom, because a lot of you guys, what you do, you will see the market moving down, and all of a sudden you see this, and you see the market reversing, and you press your buys here, because when I ask why you buy, you say, I saw a double bottom, or I saw a W shape, and I began to buy. But the truth is that this shape isn't complete. The shape is not complete. So what makes pattern trading so profitable? It is the ability to wait for the pattern to become visible. For the pattern to become visible, I'm trying to draw an eye. It is for you to wait for the pattern to become visible. If you can now see the pattern, but what you should pay attention into as well, it is to make sure that it is no longer, or it is not late for you to enter. Because entering, for example, entering a double bottom, it's an issue of a breakout of this so-called neckline, or this point here, this high here, because that's what is going to complete the strength of the buyers. If we cannot see a new high, it means that even this low is useless. For the fact that this low is not below, or okay, for the fact that this low is not below the previous one, it is useless if we do not have a new higher high. If we do not have a new higher high, then a higher low is useless, because for the pattern to be complete, or for the market structure to be complete, we really need to see the two things coming together, a higher high and a higher low. And then we are saying, now we are good to go. We are good to press the buy. Why? Because now the buyers revelation of strength is now complete, which is the high low and the higher high. So that's why it's very, very significant to wait for the breakout of this neckline. And maybe, as I taught you guys, that we have different ways of entering breakouts. We have different ways of entering breakouts. I will just repeat this for the sake of you guys who are not familiar with my lessons or my approaches. We have two different ways of entering a breakout. It's entering a breakout at the exit point immediately when it happens, and it's entering a breakout when a retest happens. It's entering a breakout when a retest happens. But in this scenario, it's like both the things happened at the same time, because what I taught you was that we enter at the exact point when the candle that is initiating the breakout is bigger. When the candle that is initiating the breakout is bigger, then we can enter our trades at the exact point. But if it happens that the breakout is initiated by I'm trying to fix something here, by smaller candles. If it happens that the breakout is initiated by smaller candles, then we do not enter, but we wait for a retest. But here, what happened here, the beautiful thing is that the buyers pushed the market, and then they bounced back here, and then they went again up. So these move here, it seems like it's some kind of a retest, because what I always tell you is that this high here, it is a zone, not just a point. So one can draw it like this and say, that's my region. So it seems like the price came in this region, it wanted to go up, and then it came back again, and then it went up. So this can be interpreted as a retest of that region. And also this big candle, it's something that we need if we are going to be entering a breakout, because we want to see what? Motivation. If we are gonna buy, then let the buyers motivate us to do so. We can't just enter a buy without them showing us that they really deserve support or they are really willing to push the price up. So those are the two key things that made me to say, okay, let me just try this buy out. Although I'm expecting a lot of things to happen. Why? Because here, let me just point to you, because here around here we have some kind of a seller's territory. Not actually that was a territory which began a move, ne? It was a territory which began a new kind of strength, because I think I've been teaching you guys about market shift. It began a new kind of some market shift, because you can see that here the market was flowing in this manner, but all of a sudden it then flowed in a different manner. So the flow shifted, or the strength shifted from weaker into stronger. So that's why I said I'm expecting something. Maybe it is like that. Something might happen here, or the price can continue to move up. Or if something happens here, let me just break this thing deeper, this trade deeper. Because usually, guys, when I take a trade, to be honest with you, I analyze both sides. I told you this, that if you want to take a good trade, make sure that you firstly analyze the trade in the picture that you are seeing. For example, here I was seeing it as a buy. I analyze it as a buy. And then now the second thing, it is, okay, let me now be pure and analyze it as a seller. Let's say now I want to sell. How was I gonna look at this market? So then that's where I come up with all these things and all the possibilities, because the best thing that you can ever do as a trader, it is not to neglect or ignore the possibilities, but that's something that we do as traders. We say, I see a double bottom, so guess what? I am expecting price to move, and we begin to draw in our charts. We draw in our charts, and we show that, okay, I'm gonna buy here and I'm gonna take my take profit all the way up there. But the truth is that you really didn't consider the opposing side. That's how you are gonna suffer from emotional pain when this trade doesn't work out, because you're not expecting it. So the mother of disappointment, it is expectation. The mother of disappointment, it is expectation. If you as a trader, you suffer from emotional pain, or you panic, or you freak out when something that you are not expecting begins to happen, it tells you that you are not expecting in a correct manner. You have to shift the way you expect. One thing or one gift that you can give yourself as a trader, it is expecting the market to do whatever it wants to do. It is expecting the market to do whatever you want it to do. That's why I was telling someone today, there is a certain student who sent me an inbox with a chart. He analyzed it and he said, let me give a word into his analysis. And I told him that if you're analyzing the market, don't try to instruct the market, or don't try to make the market do what you want it to do, but allow the market to tell you what it is willing to do. I hope that one is making sense. For an example, when I am analyzing here, saying, okay, I have the possibilities here of price reacting. Not that I am a fool as a trader, because the first trader will say, okay, I'm expecting prices to move, and maybe somewhere randomly he will indicate some kind of a pullback, and again he draw an impulsive wave, and somewhere randomly he indicates again a pullback. And if you can ask, why did you say the market might pull back here or whatsoever, he won't tell you an explanation. He won't tell you an explanation which is firm. But if you do this and you say, okay, the market might reverse here, or if it doesn't reverse here, the market might also reverse here. Not that it would retrace. Also consider the fact that it might reverse, like completely going down. Then in that way, you allow the market to tell you what it is willing to do, rather than you being the guy who is telling the market what to do. Because a lot of traders, they think this is a game. They will come to you and say, you see, gold is going to go up no matter what. And you will see the proof is their positions. You will see 17 buys, 17 buys of gold. He pressed the buy button 17 times, and you will see the lot size. He has just tripled the lot size. He's using 3.0 and so on. Because why? His level of belief is very, very high, which is something dangerous. It's actually the most thing that is killing us as traders. Ne? Having unrealistic expectation. One thing I will repeat, one gift that you can give to yourself as a trader, it is to have no expectations at all. Let your expectation not be fitting to what you are expecting. If you are buying, don't say you are expecting the price to go up. Expect the price also to go down. That one is going to help you to be a good risk manager, because we are poor when it comes to risk management because of our expectations. Ne? Because of our expectations. I hope that one is making sense. So pattern trading is all about that. Knowing and seeing the patterns, but understanding also the fact that it is likely that the patterns don't play out. It is like that the pattern don't play out. And when it comes to the patterns, I hope you all know this because it's some kind of basic stuff, or it's the first topic when you read about patterns. The two types of patterns, that we have some kind of reversals, and then we have some kind of continuation patterns. No? We have some kind of reversal and continuation pattern. For an example, here on the reversals of the double top, the head and shoulders, what am I drawing? Double top and double bottom. Ne? And here we have the flags, and with the wedges and so on, whatever you can think of as a trader, the continuation patterns. Ne? So, but what you want to note, as I always highlight, is that you need to make sure that you're trading, although I can draw a pattern, and I say, okay, I have a corrective pattern here. I have a corrective pattern here, and when the pattern is broken, that's when I'm entering, because that's the method that I always teach, that if we are going to enter the market, let us see a pattern. If you're going to enter the market, let us see a pattern. But the most significant part is that our trading or our entry is not pattern bound. Our trading or our entry is not pattern bound, but it is all about the message behind the market move. It's all about the message behind the market move. It's all about how the market forms the pattern. It's all about how the market behaves inside the pattern. It's all about how the market enters and how the market exits the pattern. It's not about drawing a pattern and say, I've seen on Telegram, I've seen on a PDF that usually when there's an ascending pattern, a breakout would happen on the downside. It's not about that, but it's understanding even when is that pattern going to when is that breakout going to happen, and what is happening inside the pattern, because you can see this and you can point it as a pattern, yet it is just a new beginning of bias. The pattern can go on without even breaking out. Why? Because you only saw it, or you were only blinded to say, I know when the market moves in a channel, I know it is going to break out. So sometimes it might take long, it might take even forever not to break out. So you need to understand the message when it comes to the candles, or the data that the candles they're trying to preach to you. That's where we have the things like momentum, which I always teach you. Once you are able, because mastering price action, it's all about understanding the logic, or understanding the message behind this market move. The message behind this market move. That's why I always say that for you to take a trade, you have to have the ability to explain even to a young child, and let that child understand exactly what you're trying to say and what you're trying to do. If you can't explain your deeds or your acts in the market, then it is pointless. Entering that trade is pointless. Entering this trade because you see W pattern, that's pointless. Yes, it's a W pattern, but we are not playing a game of patterns here. This is a reality. These are minds. These are minds of people forming this structure. So you need to be able to interpret in a language of the market. You need to be able to interpret in the language of the market, not in a language of like someone who is studying patterns or someone who's playing puzzles, that will always say it is not about line analysis, but it's about understanding what the buyers or the players are doing in the market, or what they are doing actually in their trading. I hope that one is making sense. I hope that one is making sense. So from now on, what you need to know as a trader, if you are going to be trading using patterns, or if you're going to be basing your trading into pattern, you need to have one thing, and this is going to make your trading very, very interesting. Understanding the message behind the pattern, interpreting whatever that you see, trying by all means to break it down into something tangible rather than just bars. Né? Because all what we do as traders, we see this as bars, not as actually people or information behind this market. That's why when I make illustration, I always say, see this thing as a real product. For an example, that's why I make examples with bread, example with fonts, that let's say this is the price of bread, because I know that you are going to understand it clearly, because you know that bread, or the price of bread, or the way bread is being traded, it's all about the mindset of the seller and the mindset of the buyer. Ne? So I hope that one is making sense. So let us take it further. Let us take it further. Let us take it further. So now, why do we have to use the patterns, and why are they so significant? Ne? Just like strategies, just like systems, ne? I told you last time that we use systems, we use strategies, we use price action, we use technical analysis, so that we can create order, or so that we can have some kind of rules to follow, because we know that if you don't have some rules, then it's hard to succeed. Even in life, if you don't have some kind of rules or disciplines, it's hard to really achieve whatever that you want to achieve. So same thing applies here. We can't just be trading randomly. So we need to have some set of rules to follow, or an order to follow. Ne? So for an example, once you are able to define the patterns, this is one thing that will help you guys. Because we have two waves, we have the corrective wave and we have the impulsive wave. Ne? Both these waves, they are made of patterns. Ne? Both these waves, they are made of patterns, but the way the patterns are displayed in both the waves, it's very, very different, and they have different meanings. Ne? They have different meanings. For an example, let's say you have a pattern in the, what is this thing? You have a pattern in the corrective wave. Ne? A pattern in the corrective wave is gonna resemble an entry for you. Ne? That's where we are gonna enter the market. I'm gonna break it down. And then a pattern in the impulsive wave, it's a pattern that is gonna propel you to exit your trade. Ne? To exit your trade, and all the information taking place in this impulsive wave, it is the information that is going to help you to manage your trades, or to do trade management. Because trading doesn't end on entering and exiting your trade. It's all about the entire process: analyzing, entering, managing, exiting, and post analyzing again. Because you can't just buy gold and then you take profits and then you go to a party without even looking how is the market gonna play out next, because you are willing to take a chance again. Because if you're able to predict gold moving up here, it means that now you have an advantage. You have an advantage because you were able to predict the beginning of the trend. It means that you will have a clear structure, or a clear understanding of the entire trend, because you were able to spot how it began. Then the way it will continue, it won't be hard for you to analyze, because you have the information of the buyers from the start. Yeah. So corrective waves, for an example, this wave that I made an example with. Yeah? Here is another one. And then here is the one that we're talking about. So both these corrective waves, they are telling you when to enter, because if it's a downtrend like this, it means that we are only entering when it comes to sales. We are entering on the selling side and we're exiting on the buying side. We are entering on the selling side and we're exiting on the buying side. So if you see this corrective wave, make sure that you understand the pattern in it. And if there is no pattern, or if there is no clear market flow in your corrective wave, guess what? It means no entry. You do not enter a trade if you do not understand what is happening, because definitely if you're going to make money, you're going to make money because of luck, and there are high chances that you're not going to make money, and the high chances that you're going to panic as the trade is playing out, because you did not understand what what's going to happen in the market. You did not understand what the market was doing. Ne? So that's the first thing. Understand the pattern in the corrective wave. And if there is no pattern, it means no trade. Ne? It means no trade, because it's the same thing as in transition, that if there is non-transition, then we do not enter, we don't begin a trend, because we need to see the buyers handing over the market to the sellers. We need to see the sellers handing over the market to the buyers, so that it will be easy for us to see, to track momentum and market behavior. Ne? So you need to understand the pattern for you to enter. And the best way to enter, as I always teach you, is to wait for the pattern to be broken, and then you are good to enter your sales. And after you enter your sales, again, it's a beginning of another analysis after you've entered your trade. That's why I said it doesn't end with entering. It doesn't end with entering. So it's a beginning of another analysis. Let's say now you analyze, how is your impulsive wave playing out? Because the best way, or the best understanding that you can ever have as a price action trader, is that the same way I have entered should be the same way that I am exiting my trade. If I entered my trade because of a pattern break, let my exit be because of a pattern break. But here it was a pattern break in a corrective, and here it is now a pattern break in the impulsive. It's nice and easy as that. It's nice and easy as that. So then you need to be reanalyzing your impulsive wave. So then definitely what you need to know is that you can't just say, he said we should exit when the impulsive wave is broken. Now, it should be broken on the opposing side. For an example here, this doesn't mean you should be exiting, but it actually means that the market is moving on your favor, because this breakout here, it is a breakout of an increase in momentum or increase in power. That what I told you at first, that the market shifted the strength. So it was another pattern, but then the only way you're going to exit those cells, it was somewhere down here when the market has broken down the newly formed pattern. Guys, I can hardly read your messages. I don't know why. Seriously. If you can see my screen, you can see how they appear. I don't know what's happening with the platform today. But yeah, I can hardly read your messages, so I don't know why. So that's why you need to be keeping in your mind as a price action trader, that you do not just wander around trading without following a set of some price action rules, or really having an in-depth understanding of what is exactly happening when it comes to pattern trading. It's all about understanding what the market is trying to say to you. So I hope this was clear, guys. I'm not willing to make this very long, because I hope those who are on the Telegram group, I've already told you that we are gonna be having the webinars frequently, like Tuesdays and Friday, no longer only Fridays. So I've decided to add a day. I decided to add a day. So we are gonna be having the webinars frequently. That's why I don't wanna keep them long. So I hope everyone is part of the free Telegram group. So I hope everyone is part of the free Telegram group. So that's where you're gonna get the updates in terms of the webinars. But the fixed days are Tuesday and Friday. So I'm gonna keep it short, and I'm gonna just leave you with this stuff, guys, to just go and meditate about it, and go and really test it, and really go and apply it, and understand it properly. So I'm just gonna leave it here. Ne? Thank you guys for joining. Thank you for joining. One day I will buy one of the packages, and then yeah, I will be happy to. I'll be happy to have you. So thank you guys. Thank you guys. Thank you guys. Thank you guys. Thank you. Thank you. Thank you. Thank you. Thank you. Yeah, you guys will have a good evening. You'll have a good night. That's it for today. That's it for today. It's simple, guys. Nothing complicated. Nothing strange. Nothing complicated. Nothing strange. Just go there and then do what you can. Do the best you can. Apply the information. Apply the information. Apply the information. One thing that I will just teach you, or just one tip I will give to you, is that you don't need to pay for anything to really be good at trading. You don't need paid courses, paid whatsoever to be good at trading. The reason, maybe as mentors, the reason we charge you, it is because of our time. It's because of our time. Actually, what I can tell you is that the valuable stuff is also free in the internet. So some people, they worry that I don't have money to learn how to trade. So how am I gonna be good at trading? You don't need that. You just need the willingness to learn. You need the willingness to learn. Information is available, and I'm also doing whatever that I can to just give you guys the information like that. So thank you guys. Thank you.